In its own way, this might be no less a monumental story in the end. Stripe yesterday launched a new product, Treasury, to allow its customers to offer checking accounts and other business banking services. Among the first partners to sign up to offer this, Shopify, beginning next year. This comes on top of news from earlier in the week that Stripe Capital, its business lending service, was also being extended to other online platforms, thereby allowing anyone to offer end-to-end lending APIs to provide customers with financing options. To understand why this is a big deal, we knew Stripe was the big unicorn in the payment space, but what is blowing a lot of people's minds is what Stripe seems to be signaling it wants to be, the biggest player in the money space, all of money. Full stop. Like with these two products, Stripe is basically planting its flag in a huge swath of the entire FinTech space. There are literally dozens of startups who have raised money to be the Stripe but for X or Y, banking or lending or whatever. Now have they all been made redundant by Stripe? Ben Thompson, as is his wont, went deep on these announcements this week, and let's just say he's blown away. Quote, "This broader understanding of Stripe's ambition became clear to me earlier this week with another announcement, Capital for Platforms. Stripe Capital itself is not new. Launched in 2019, the service lends money to businesses that use Stripe's payments processor. As the industry has become more digital, PayPal, Square, and even Amazon have introduced small business lending programs, as have a slew of startups including SoftBank Group-backed Kabbage and public company On Deck Capital. Though lending poses risks, Stripe, much like other payment services, says the extra data it has on customers will give it a better idea of whether borrowers can repay loans. The company believes that edge will protect it from significant losses during an economic downturn. Stripe Capital seems both obvious and, as the article notes, rather unoriginal. This week's expansion, which was announced with a 29-word blog post, makes it clear it is much more. Carefully read this tweet from founder and CEO Patrick Collison, quote, "Mundane though it sounds, access to capital is the primary bottleneck that limits the growth and expansion of most small businesses. So we built Capital for Platforms. Help your customers grow faster by using our lending infrastructure," end quote. Note the word Patrick Collison emphasized, your. Capital for Platforms is not for Stripe's customers, but rather the customer of Stripe's customers, which is to say, Stripe is asserting itself as the platform of platforms. Go back to the news that Shopify Balance will be powered by Treasury. Stripe does not have a customer relationship with all of the shops on Shopify. That is exactly what Shopify is good at, so why would they? Instead, Stripe is focusing on what it is good at, providing that API layer to banks that will never have the capability to serve Shopify shops, and exposing said layer to Shopify to incorporate into their products. Stripe is 10 years old now, but the ambition implied by these announcements explains why the founders claim they are just getting started. The company is busy building, well, exactly what it has said it was building all along, economic infrastructure. And I will freely admit, until this week, I didn't completely appreciate just how mammoth an undertaking that was, end quote. Yeah, when I talk to smart folks in VC, in tech, in the startup ecosystem lately, the two unicorns everyone is most excited about at the moment are Roblox in the gaming space, but also Stripe, and especially Stripe lately. Uber for transportation, Spotify for music, Shopify for non-Amazon commerce. All cool markets to try to own, but what if you could own money? Not by disrupting Wall Street, that's small stakes, but by fundamentally rewiring the global financial system itself.